afternoon. Ira Epstein of Linn Associates with your agriculture update, and this is for Wednesday, and we're now at the 1st of May 2019, about 4:15 p.m. Central Daylight Time. Dollar strong again, but it didn't really impact the grains. You got a good rally out of the wheat today. You got a good rally out of the corn today. Did the corn find the bottom in the 350 area is going to be something important. The hog market went limit bid today and closed like that. Did it get cheap enough? I don't know. What bothered me during the day is if you came over and you looked at the copper market, it was down rather dramatically, which has me thinking, gee, maybe there's no Chinese deal, or maybe the market didn't like the ISM data, and that's what weakened the metal markets, because silver got slammed against the gold. Maybe it was just that. When we take a look at soybeans for the week, we're down 14 cents. And as you can see, the market has just sliced into an area now where back here from if you go a year ago to the summer, this was the whole area where the market found its footing. Is it going to do the same again, getting back towards that $8 mark? I think that's the question we have to ask ourselves. This market has gotten what I'll call a very hard break. You've gone now from recently in April. Hard to believe, a month ago you were at $9.20, and here you are pushing $8.50 a bushel. I was on TV today on BNN TV. They're talking about canola. And I said that even though the government's supporting them, just look at the U.S. model. And I'm hearing these retirement auctions as farmers are coming out of the business of farming and going to just let the land pay for itself by renting it out to conglomerates and the like. Well, you lose a customer like China, you know what happens in these markets, and you can see it in the American market. We lost China, the market went down. That's not saying that the African swine fever might not have also created a problem, but we know we have the trade issue, and Canada has it. As you're looking here with the lower highs, lower lows, you're under the 18-day average of closes, which is underneath the 100. So the Bollinger Band became the potential for support, and it gave ground way back here. Right here. When you hit it, you got your first bounce, then you came back down. That was pretty much all she wrote. Once we cleared this zone, and it doesn't happen that often, the market went into a breakaway, and it hasn't looked north. It just continues to drop. It's called running the lower Bollinger Band. And of course, it is synced in with this embedded slow stochastic, which is when the oscillator that's the slow stochastic converts itself from being oversold to locking in by keeping both the K and the D lines, the red and the blue, sideways or lower under 20, not picking its head up. When it gets over 20, it's a sign the market's run out of downside steam. Hasn't shown itself yet. When we come to the meal market, if we look at how many days we now have under 20, you have today, you had yesterday, the day before. There's your several days. You even had one before that. So you've got your readings there, and like the soybean market, you're running to the downside. The first support right through here, this whole area, you had your one bounce. We'll get another one. The question is from what level? In the soy oil, you got lower highs, lower lows, down to the lower Bollinger Band, but oversold. So a little different here. And of course, as I said, canola, which those of you that watch it, you know it keeps going down in terms of Canadian dollars to new contract lows. In the corn market, one of the things in my morning subscriber video, which is different from these, I was looking at the market and I was saying, you know, the type of setup, if you get over 266, you get yourself over the 18-day average, a close over that could set up the first buy the market has thrown out in terms of momentum up, higher lows, higher highs. So that buy isn't the right word. A bullish signal's the right word. That the market went into a bullish mode, and until it takes out this 358.5, I would be looking back and saying this 352 area is looking like the market found a value zone. Will it have enough power to get to the upper Bollinger Band is something we have to ask ourselves. And of course, the pivot, if the market slips back, what it does against that line in the sand, that 18-day average, is going to be very important. In the wheat, you still have the embedded reading, which keeps the market in the bear camp. You have the lower highs, lower lows. You've had a couple of tests of these lower Bollinger Bands, and you're not pushing through them in a big way. Could get some short covering at any point. But even if you went through this 446 and 3/4 level, What do you do there? Well, you're still under the 18-day average, and the pattern can't change. You'd have a lower low, higher high. So I can't see anything that gets overly bullish on the chart. I can see reasons if it had a heck of a rally where you can knock out the short right now. In the sugar, this is a market that is rolled out like a soybean market. You can see what's going on. Now, it's not embedded. That's very different. Will it push and then try to get back into the Bollinger Bands? That's probably what's to be expected, or at least ride it. But you are in a downtrend in a market that's oversold, hit its first objective, retested it, and it's not holding above that. Here's another failure market. The coffee has failed each time it's made a run at this 18-day average of closes. How long that'll go on is anybody's guess, but it's there. You've got the higher high, lower low, momentum down and bias down. Next support, if the market decides to break, is 90.05. Even if you rallied back through Tuesday's high of 95.10, because you made a lower low, you can't get a bullish signal. That's the word I'm looking for. What do I mean by bullish? Higher highs, higher lows. What do I mean by bearish, which is sell signals for some people? Lower highs, lower lows. We don't talk buy and sell here. We're talking bullish, bearish, and that's what I'm talking about. In the cocoa, the market re-entered the bear phase. You've got the lower highs, you've got the lower lows, you closed under the 18-day average yesterday. Once the market took out yesterday's low, the next objective could be the 100-day average or the Bollinger Band if it picks up momentum. We haven't quite hit that 100-day, but we're certainly knocking on the door of it. In order to negate this pattern, and by the way, you could turn it bullish then, would be getting from here up and over 24.07 and not taking out the 23.34. I don't see that on the cards just yet, but if it happened, take good notice of it, because you'd break the pattern of lower highs, lower lows, and instantly flip then to higher lows, higher highs. In the cotton market, this was a surprise to me, at least today. Normally, that 100-day average in the Bollinger Band, I'd have thought it would have offered a bit more support in an oversold condition. It did not. This market just plain let go to the downside and came back at the end of the day. You can't get away. It's only down 7. But I was surprised that it got as far down as it did. By the end of the day, I went, my thinking wasn't wrong. Maybe that was just a washout phase, but it is paying attention to the Bollinger Band and that combination of the 100-day average. In the cattle market, it's sort of like soybeans, as it just let go. You can see that. Oversold in a free fall. Feeder cattle, oversold in a free fall. Hogs, the first challenge right through here, that lower Bollinger Band. Yeah, you went one day past it, then you started bouncing. Now you're limit bidding it. So the idea still held up that first test was important. Plus, you're not going to embed. You're just plain oversold market. If this market decides to run, the 18-day average might be the next resistance. Support, well, if you take out today's low, then the Bollinger Band becomes the support again. I want to remind you what I do in the mornings, and I think it's so important. At approximately 6:15 a.m. Central Daylight Time, I sit down and I start recording 45 charts, one after the other, live. I'm not in the video. I'm capturing my screens. They are this color. These are the different studies that I put on it, and I explain the studies to you as you go through. I'm hoping you have a cup of coffee at that point. You're coming in, and I do in the same sequence each and every time the market's like this. That way you can pull on the bottom of the recorder and go to where you want. We're even trying to find a way to break on that recorder so you know where the next section is. I'm going to give you what I see as the chart action. I'm going to tell you what I think the pros are doing in the market. I'm obviously by that hour, I've read an awful lot by that time. So I have an idea of what the fundamentals in the morning are, what the technical picture is, and I'm going to throw out lots of trade ideas, more than I even write about, to be honest with you. There'll be a lot more trade ideas, position, option ideas at time, longer term trades, different ways that I see it, but a lot for the swing trader, for the guy going in and out of the market. I sometimes even cover the pivot points with it, and I'll take you and show you why I'm seeing what I am. The idea here is that I'm not your broker in most cases, right? So I'm trying to give you something you can look at, and if you respect me and you're looking at these videos at the end of the day, maybe you want to see one where I can actually say, buy here, sell there, here's your stop, here's your price objective, here's why, covering a nice sequence where you want to go. You don't want to see energies? You don't need to. They're at the end of the tape. You want to get to the soft markets? You'll know where they're at right on there. That's the idea behind this. Cost, 26.5 cents a day roughly. $7.95 for the first 30 days, no contract. If you decide to keep going, you can at $15 every 30 days, or you can switch over to a one-year subscription for $156 a year. Certainly a lot less money than people are used to paying for these things. Plus, you get this from me just about every single day. So it's Monday through Friday. I'm even thinking, as I told you, on important evenings doing another one for you. So haven't forgot that. I just haven't had the importance yet to come up. As soon as it does, I'll be there. I'm Ira Epstein. If you'd like to look at this, just go to our website, www.iraepstein.com, under Education or Research, Morning Subscriber video. You can also click here to get to our website, and it'll take you right there. I'm Ira. You have a good day. Talk to you tomorrow.